Hello, my name is Michael Podman, and I am an analyst in the Burke Road program at Tulane University's A.B. Freeman School of Business. Today I'm here to talk to you about Iberia Bank. Iberia Bank is a regional commercial bank servicing the southeastern United States. The bank is headquartered in Lafayette, Louisiana. Here we have a chart detailing Iberia Bank's price over the past 5 years. As you can see, the price is only up slightly in this time, but this is due to many macroeconomic factors, more specifically the financial crisis of the late 2000s. Our analyst team, however, feels that Iberia Bank is in a great position to see solid growth in the upcoming years. Iberia Bank has experienced tremendous growth over the past 2 years thanks to a large number of acquisitions. At first, the targets of these acquisitions were primarily failed banks. Thanks to FDIC loss share agreements, however, these acquisitions were significantly less risky than they otherwise would have been. More recently, Iberia Bank has been focusing on acquiring successful banks within its geographic footprint in order to increase its market share. For example, the 3 targets of the most recent acquisitions, Cameron Bankshares, Omni Bankshares, and Sterling Bank, are all successful Louisiana-based banks. We expect this level of acquisition-based growth to continue in the next year, with 2 or possibly more local banks being acquired by Iberia Bank. 2/3 of Iberia Bank's asset portfolio is outstanding loans. Of these loans, roughly 70% are commercial loans and 10% are mortgage loans. This asset mix is a result of the subprime mortgage crisis and Iberia Bank's hesitance to re-enter the home loan market. Instead, Iberia Bank is positioned to take advantage of any commercial growth within the Southeast region. As the regional economy is driven primarily by oil and gas, we believe that Iberia Bank is well positioned for the future. For comparative purposes, we identified a list of publicly traded regional banks. This list includes Whitney Bank, Hancock Holding, Mid-South Bancorp, and Regions Bank. We should note here that Whitney Bank was recently acquired by Hancock Holding, but will continue to operate as Whitney Bank in New Orleans and Lafayette. Of all the peers, none is able to claim the same level of growth in assets or branches in the past 2 years as Iberia Bank. Institutional investors hold 89% of Iberia Bank's outstanding shares as of February 25, 2011. This number represents a 2% decrease from February 2009, indicating a relatively unchanged institutional outlook for the stock. No individual shareholder owns more than 5.1% of outstanding shares, which is extremely rare for any company. In order to establish a 12-month target price, our group chose to use a weighted valuation approach in an effort to capture changes in price brought about by both industry trends and Iberia Bank's acquisition-based growth strategy. We decided to use the price to revenue per share and price to book value multiple valuation methods in our analysis. The weighting of these valuation techniques gave us a 12-month target price of $68.13. This represents a 16.84% capital gain over the current price of $58.31. Combined with a dividend yield of 2.3%, which Iberia Bank has held fairly consistent since they began their acquisition strategy, the total implied returns are estimated to be 19.14%. According to our grading scale, this qualifies Iberia Bank as a market perform. On behalf of the entire Iberia Bank research team, the Burke Road Reports program, and Tulane University, I would like to thank you for taking the time to listen to our report on Iberia Bank. Burke Road is a 4-credit course put on by Tulane University's A.B. Freeman School of Business. Students research small-cap stocks located in the deep south of the United States. Coverage of our companies can be found at our website at www.burkenroad.org. The Burke Road Reports are produced solely as part of an educational program at Tulane University's Freeman School of Business. The reports are not investment advice, and you should not rely on them in making any investment decision. You should consult an investment professional and/or conduct your own primary research regarding any potential investment.